Welcome to Edison TV. I'm Jo Price, here to explore whether one company, Edison client AQRU, has what it takes to move cryptocurrency beyond the realm of the spectators, most of whom have exceptionally deep pockets, and into the hands of smaller investors and perhaps even millions of regular savers. So first, the background. Cryptocurrency currently sits in an odd polarized space within the investor psyche. Heavy on the promise of seismic change, it has seemed light on the stability and integrity needed to deliver a meaningful revolution. Yet the asset class has come a long way. From a tiny, noisy plaything of the tech cognoscenti, early gains from Bitcoin transformed crypto into a tradable asset for speculators, sparking many imitators. Whilst initial speculators had to be comfortable with extreme levels of risk, it did not deter ever more pouring in, bringing with them further increases in volatility as confidence in crypto's future rushed, then fled. Yet as each price cycle attracted more interest, spiraling demand ensured spectacular midterm returns. All the while, the rest of the world debated, and often doubted, the asset class's intrinsic value. Then came the turning point of institutional investment. By the time the low-yield environment had become chronic in the late 2010s, even the most corporate eyes were hungry for higher returns. And finally, crypto was invited to the top table. Yet with so many unregulated players, a fly-by-night reputation, and a brace of apps with poor user experiences, only the most well-funded and sophisticated professionals, backed by IT teams and lawyers, had sufficient knowledge to participate safely. Which brings us to today. In the here and now, cryptocurrencies remain a spectator sport for most of us. But could this be about to change? Two men who think so are Phil Blows and Digby Try, CEO and Executive Director of AQRU. AQRU's mission is to usher in an era it calls Crypto 2.0. The pair believe that this new era will be one in which cryptocurrency is an asset class held by hundreds of millions of investors and savers. They see it as the next natural leap forward, in a similar way to how the internet itself was adopted 2 decades ago. Now, for many of us, that might sound like quite a leap from where we are today. So I'd like to thank them for coming into Edison today to explain their vision to us and to help us understand how they hope their own business will generate profits for investors. Hello, Phil and Digby. Welcome.
Thank you.
So firstly, Phil, if I can come to you, can you take us through this? Why do you believe that cryptocurrency can be opened up to millions more people beyond its current environment of speculators and large institutions?
Sure. So if we rewind back to 2008, where the first Bitcoin was mined, it was really a very sort of technically savvy community of developers who were involved in cryptocurrency. And in order to safely store your assets, you had to be a developer. Now, fast forward to where we are today, and we've seen the emergence of these bank-grade institutional custody solutions, which means that it's much simpler now to safely store digital assets and make sure they can't get hacked. I think we're also seeing a huge amount of institutional adoption, with the crypto market now peaking at around about 3 trillion in assets, and 21% of hedge funds saying that they've got some sort of exposure to cryptocurrency. It's now becoming a much bigger asset class. And so, crypto 1.0 was very much focused on, buy something, hope it appreciates in price. And we saw Bitcoin go from, below $1 to a high of over $68,000. Now, what crypto 2.0 is a really interesting new market, and it's the emergence of decentralized finance that's driven that. And decentralized finance already has 200 billion worth of assets that have gone into it. And what that is people taking these cryptocurrencies, and as opposed to just wildly speculating on them, doing something a little bit more interesting with them, which is kind of lending them or borrowing them and these sorts of things, and beginning to generate really consistent yields. So when we have these consistent yields, what that means is that it's attracting a different sort of asset of investor. So not wild speculators, but people who are looking for investments that are going to give them some sort of element of consistency. And our view is that cryptocurrencies is going to make up between 5 to 10% of a diversified portfolio in the not too distant future. And I think turning that into a product which is really easy to consume, that's exactly what AQRU has done.
Exciting times ahead then, Digby. If I can come to you now, presumably then AQRU believes it's created a product which makes crypto accessible to all. Can you elaborate on that?
Yeah, absolutely. I mean, the AQRU platform doesn't just give customers the access to crypto, it also gives them access to some of the highest yields in the market, which are delivered through our investment portfolio management team sitting behind that. So an AQRU user can go on and sign up within seconds. You can then transfer crypto onto the system, but you don't have to start with crypto. You can start with sterling or euros or a range of currencies. You can put those onto the platform by a card payment or a bank transfer. You can then convert those into Ethereum or Bitcoin. We essentially do that for free at institutional rates, and then from that point on, you're earning interest on those assets. With Bitcoin and Ethereum, of course, you have exposure to the capital appreciation of those, but irrespective of how the price of Bitcoin or Ethereum is moving, you are generating a 7% annual yield on those assets that is accrued in real time and that you can take your funds off the platform whenever you like to. Our highest yields are actually on dollar stablecoins, and these are slightly different. They track the value of the dollar. So when you've transferred your funds into those, you're essentially not exposed to crypto as such. You are being paid in dollars and you're tracking that value and earning the 12% on those. So we've wrapped all of that up, security being so important, we've wrapped all of that up within a bank grade security package. And we've kind of made it very, very easy for customers to not only just move funds onto the platform, to track the performance of the funds whilst they're sitting with us, and then to remove that at any given stage. The ease of the platform kind of belies a lot of the complexity that sits behind it. So, you know, even for your sophisticated investor or saver, and I like to think I'm one of those, but there's a lot that goes on in terms of doing the activity yourself. So if you were to sort of do it outside of AQRU, you would need to obviously choose your wallet provider and create your wallet, look at the various DeFi protocols that you wanted to connect to those, possibly bridge your assets to the appropriate ones that you need. You're likely to be earning in multiple coins, so you need to monitor that and convert those so that you're compounding your assets to optimize the interest. And monitoring all of that and doing it is a full-time job, and that's why we've got a team on it. And it's that's the real value for our clients, because it's that sort of portfolio management and insight that sits behind the platform, which means our customers can sit there happily just watching the interest tick up in real time on the app.
Wonderful. So we did touch on the app there, Phil. If I can come back to you now. It's built, it's released. What does the team do? I mean, Digby elaborated a little bit on that, but how does the business actually earn its money?
So the way we work, we pay a fixed percentage for people to deposit assets with us. So just say someone was to deposit the stable coins, the US dollar stable coins that Digby mentioned, we would give them a 12% return on that. And if it was Bitcoin or Ethereum, we give them a 7% yield on top of that. And the way the business makes its money is, we are going out, we're looking at a diversified group of institutional lenders, but also DeFi platforms. We earn in excess of that rate, and that is the margin that we effectively keep. We've got a very, very long and successful track record of generating significant returns on investment in the digital asset space. So we've got healthy margins there. Now, in terms of the longer term profitability of the business, we launched the app back in December. We've already seen impressive growth and interest from both retail and institutional customers, as well as these platforms which I mentioned, who are looking to sort of integrate our API and put it to their millions of customers. In terms of what we think we can do as a business, we look to some of our competitors who, they've already gathered tens of billions of assets onto their platform. Now, they've managed to do that with products that are not as slick. They haven't got the same kind of fiat or real money on-ramps as we've got. The returns that they offer their customers also are significantly lower. So, we see this as realistically being able to get billions of dollars worth of assets onto our platform in quick order, and also getting tens of thousands of customers to come and engage with us in the short term. So we've got a really aggressive growth target that we're confident that we're going to be able to hit. And we think that it's a very, very profitable space to be in right now.
Thank you both for walking us through it. Certainly sounds like exciting times ahead for AQRU, but of course, from an investor's standpoint, this is only one perspective. Fortunately, Edison Director of Financial Equities, Miloš Pabst, has a great deal of insight across what can often be a rather confusing landscape. He's also taken an initial look into the AQRU business. So I'm pleased to welcome Miloš, who joins us now via Zoom. Hello there, Miloš, and welcome. If you can give us more context, please, around AQRU's business model.
Hi, thanks for having me on. Sure, decentralized finance, or DeFi, has emerged as an open global alternative to the traditional financial system. It offers internet users free 24/7 access to a range of financial products such as borrowing, lending, saving, trading, and payments without the need for traditional intermediaries. While still nascent, it has taken off less than 2 years ago. The DeFi space has already accumulated a significant amount of capital with total value locked in various DeFi applications, close to $100 billion at the end of last year, which is significantly higher than the 10 billion as at the end of 2019. It's perfectly true to claim that DeFi offers attractive yields, but these were, well, until recently, it was a quite complex assignment to get access to them, which was reserved only for very tech-heavy investors. However, a number of projects emerged to facilitate the simple and secure access for everyday traditional investor to this space, and AQRU is one of them. I also think it's worth highlighting that AQRU is part of a bigger digital assets trend, with the investable listed blockchain universe expanding quite significantly last year. There are a number of listed companies covering digital assets mining, trading, brokerage services, asset management, venture capital, etc. But there's only a handful of companies focused specifically on DeFi like AQRU, which I think makes it somewhat unique.
And is the business model itself something investors should be taking note of?
Yes, I do think it could scale. As Philip mentioned, AQRU generates income by keeping a percentage of investor gains. And as more digital assets investors realize that on top of the capital gains from cryptocurrency price appreciation, they can also put their crypto holdings to work in the DeFi space to generate a yield. It means that companies like AQRU should see their assets under management growing, which could allow them to realize the scaling potential. On top of this, of its consumer-facing app, AQRU also has a yield-as-a-service offering for institutional investors or its clients, involving bespoke deal terms for larger ticket sizes, institutional grades, custodial and non-custodial services, as well as treasury consultancy service. So as institutions allocate more capital to the digital asset space, companies like AQRU can see their potential addressable markets become larger as well. In a piece I've recently written on AQRU, I've also highlighted that the digital assets infrastructure has matured over recent years, translating into a high level of security. And it's also important to know that AQRU's retail offering involves a quite convenient fiat on and off-ramp solution. I mean, customers can either transfer their crypto they hold in another crypto wallet, or they can simply use their credit card or bank transfer to pay traditional money in. What is also important to note is that the yield is being accrued on a daily basis, and that customers can withdraw the funds without any restrictions, which I think is also, these are also important considerations.
Miloš, if I could just put you on the spot for a moment, if you had to steelman a bear case for the stock, focusing on the risk investors should be aware of, how would you do that?
Firstly, it's important to highlight that AQRU is an early stage company, so it's inherently more risky than companies with a longer track record. Their offering is a newcomer to a relatively new space, but where there are already existing direct competitors with better established brands. Secondly, it's important to note that yields within the DeFi space tend to be quite volatile because they depend on the supply-demand balance within the respective protocols. So for instance, the demand for leverage within decentralized lending protocols, or trading volumes on decentralized exchanges. So in periods of lower liquidity, AQRU might be encouraged to move into more exotic protocols, which are more risky in order to maintain the yield they offer to the clients. Finally, while AQRU is focusing on cryptocurrencies of the most established and robust blockchains, and also top-tier, most reputable DeFi protocols, it is still subject to certain risk associated with the robustness of the blockchains, as well as the underlying code of the smart contracts powering the DeFi platforms. And it's important to note that DeFi space has been, a quite popular target for hackers recently. Having said that, it is also worth noting that that AQRU has an insurance policy in place which at least partially covers these risks.
Okay, Milosz, thank you so much for your time and insight on this. And of course, thank you to Phil and Digby. Well, I'm afraid that's it. That's all we have time for today. However, if you'd like to know more about AQRU, download Edison's latest research. Don't forget to subscribe to updates on the stock market as well. Simply click on the link at the end and then hit follow this stock button. Thank you for watching.